Oh, yeah, it is Sunday, January 26th, a little bit before 5 p.m. Central Time, the best time. You know what that means. It's time for First Call, everybody out there. My name is Victor Jones, but you're not here for me. You're here for the one, the only, the founder and creator. You're here for Mr. Thomas Sosnoff. Tom, how you doing, my friend?
I'm pretty good, Vic. I'm feeling a little better.
Yeah, you
Get my act
sound
together.
great.
Yeah,
Sound great. You sound
I'm ready.
rejuvenated. I heard
Yeah.
you did like 5 miles. Tony put a chicken down in your backyard and you caught it. I heard you're in good fighting shape and spirits. Is that true?
I can tell you right now, I'm not moving that well, but I'm getting better. I'm definitely not moving that well.
The words of a champion. Somebody slap that on a T-shirt. I'm sure it will sell well. Thomas, what a week. What a week.
Yeah.
What a week. Are you ready for this?
Agreed.
Let's talk about last week, I suppose, before we get into this one. What do you think about last week's price action?
I thought it was. It didn't really surprise me. I thought it was truth is, I thought
It
it was
didn't
a little.
surprise you.
No, it didn't surprise me that much. I thought they would be weaker,
Yeah.
and they hung in there. And I
The
didn't.
strength. Some would say then the strength surprised you.
The strength did surprise me, but I think they're going to give it up this week. I think it took an extra day or so. I think they're going to give it up this week. I think they're going to give it up tonight, actually, a little bit.
We're going to be, you're going to be 95 years old, and I'm going to be well into my twilight years, and we're going to be doing this Sunday show, and you're going to be saying, any minute.
Any minute, I can feel it in my bones. The cows are lying down. I got it.
It's between, you're going to be doing seasonal analysis by then, trying to best fit the data. You're going to be like 8 out of every 10 weeks between March and April is a negative week. Anyways, I could do a better joke.
No, I just kind of think I do kind of think that this is the this is the danger period for the market when you get into a little bit after January expiration, you get towards the end of Jan, you get into the beginning of Feb. And this is the danger period for the market. This is when the market can't wait till March to go down. And I think the market will be vulnerable here.
Everything I watched, it might just be my algorithm, but so much of the people that I watch, I was reading and watching a lot of bearish stuff over the weekend. And whenever that happens, it's not necessarily a great signal for that point of view.
But I mean, they haven't had a downtick, so it's not a bad time to be talking about it.
It's the right pot odds play approaching these highs at 6,200 and with vol at 1485, fairly low, and the cash fix, the VIX futures are a little bit higher at 1640. What do you think about volatility and what it's telling you here? A bit of complacency in the marketplace, especially given the tit for tat going on now with this tariff war between us and Colombia? Go ahead. Step in that trap I just set for you.
Hey, said nobody ever about us in Colombia. Said nobody ever. I know what I would tell Trump if I was the Colombian president, that's for sure. But
I think he just did.
He did. Okay.
Retaliatory tariff is kind of the GFY.
Yeah.
If they're
that's exactly what I would have said. I mean, like, how could you say anything but that? It's such a joke. The bully approach to international relations and trade does not work, and that is probably the biggest scare on the horizon, is that Trump will be exposed. And I mean, he probably already is, but the market's done its best to ignore it. I don't know how much longer it can ignore it totally. Let's see I think this week you can see the market giving up a little bit of the gains it made last week. And I mean, it might just start tonight. I mean, we could easily be down 30 handles on the opening here, 30 or 40 handles on the opening. I think this is going to be, it could get a little ugly. I don't know why I'm saying it. I just think it could get a little ugly.
Bonds at 113. It sort of seems like, we didn't.
All right. Well, here we just opened, Vic. S&P's down 30, NASDAQ down 150. That doesn't surprise me, but NASDAQ down 180 on the opening. That's ugly.
And that's going into an earnings week. We got some pretty decent names that are going to be reporting. Tesla and a handful of others, Intel. A little de-risking on a Sunday night, Thomas.
I don't see how Tesla. I don't see how unless Tesla's got something up their sleeve that they. I mean, Tesla owners are not trading in their car and buying another Tesla. Period. Like, it's just every single Tesla owner that I know, myself included, will not buy another Tesla. I don't know Tesla.
Do you think it's possible that you sort of self-select your little group and that your little group is carefully curated of people who sort of think alike? You don't think that's possible?
No, I'm around too many of you people. I keep my friend group very diverse. I got everybody in there. I go all the way to the left, all the way to the right, all the way stuck in the center. They're all over the place. No, I don't think so.
I'm not particularly fond of Elon Musk right now either. So you're probably there's probably some truth to it, to what you just said.
No, actually, but that's actually helped Trump's ratings a lot. Is that people have taken out all the negativity on Elon, and I think it's one of the things that's really helped Trump and his approval rating and that kind of stuff.
All right, but I'm going to steer you away from Trump here for the rest of the show.
This is an ugly opening. Let's just leave it here. This is an ugly opening. Down 32 in the S&Ps.
Are you surprised the bonds are relatively muted here?
I'm surprised the bonds aren't. I'm surprised the bonds aren't over 114. To tell you the truth, I think they should be over 114. And I probably was a little surprised that the S&Ps got up as high as they did, and traded up around that 61.5 number again. So let's see if they can hold here. I don't think there's a lot of shorts, which is what scares me a little bit about the market bouncing up here. I don't think there's a lot of people buying in to cover shorts. I don't know anybody who's short.
Mm-hmm. Then let me ask you this question: if you are there like I was going to say securities, sound like a 75-year-old analyst, but like are there stocks that you would want to be short and then stocks that you would want to be long? In other words, I'm trying to tease out this idea that I don't think you're a binary thinker. I don't think you're just net long and net short. So I'm trying to tease out the idea, like are there any price extremes in the stock world that you would want to be long or short? I'll give you a few examples just to get
give me an example.
Moderna, for example. Moderna is at $41. It's relatively cheap, but it had a massive week last week. I think over the last 5 days, it's been up like 20-something%, given bird flu enthusiasm.
Yeah, sure.
Good God. But like, are there instruments out there that you see just massive price extremes, whether it's Coinbase or anything like that?
I mean, if you want to talk about Moderna, yes, I've been leaning long in Moderna for a while now. It has not worked. Last week was the first week we got money back at all. But Moderna is a stock I would not short here at all. Just because it's a stock that's for no other reason. I don't care what I don't care what the fundamentals are, but stock's going from 140 to 30. It feels cheap. I wouldn't get short the Chinese stocks too, even though I don't think they have a ton of upside. I don't like the downside here. I'd much rather bet on the upside. I think that's, but when you start talking about individual stocks, I mean, you could go through these NASDAQ stocks, and the only NASDAQ stock that I would say is not expensive relative to where it's been trading is probably Apple. So when you look at these NASDAQ stocks, Apple on a relative basis is kind of on its butt. I mean, it's gone down straight down. It's dropped, 25 handles, but NVIDIA is right off its high. I know Tesla's off its high, but I think that's a different animal. But Netflix is on a new high. Palantir's right off its high. Every other stock. Maybe you could argue AMD's not, but that's about it. I think that there's a lot of NASDAQ stocks that are super rich, and that's why the NASDAQ's down 230 tonight. People know it. That's the one place I think they go. I mean, I wouldn't sell Russell here. Let's put it that way.
Yeah.
I wouldn't sell Russell at all. I would sell anything else. I wouldn't sell Russell.
Yeah, you ring the register on all the concentration risk in the market, and that's the biggest problem. If the diversified S&P 500, you put $1 in this diversified basket that represents the U.S. economy, if 30 to 40 cents of that is going to 7 companies, at some point that's going to become problematic, to say the least.
Yeah, but it hasn't.
How
just
long?
to be fair,
How long?
it hasn't for 10 years.
Sure.
You know, I mean,
and that doesn't necessarily mean you have to see pain, but you either got to have a catch-up trade to make it make sense, or you got to see pain to normalize that relationship. But eventually, that normalizes. Let me ask you this question, because I've never asked you about Oracle, and it was a very long time since I even cared. And it seems like Ellison's really sort of created a lot of excitement. He's found a way to ride this AI wave and make Oracle relevant again. Do you have strong feelings about the company or Ellison himself?
I mean, I don't like either.
I didn't know.
How strong a feeling do you want? I mean, on the one hand, I can't stand Larry Ellison and I can't stand Oracle. On the other hand, we use Oracle. That's our database. I mean, it has been for the last 25 years. You know, we've been building software on Oracle databases. So I'm not sure, I'm not sure. What do you want me to say?
I was just curious. I'd never asked you about him.
I mean,
so being part of the project.
I've been dealing with Oracle now since 1999, literally dealing with them, negotiating contracts and dealing with them. They are an incredibly stubborn, difficult company to work with. But they build the best database software in the world. And so you pretty much have no choice. So, I mean,
aren't those the best businesses to invest in? The ones where you have no choice?
I think when the stock was $10 and $12, and my experience with Oracle goes all the way back to literally when the stock was trading at $10, and one of the founders was one of our customers, and he used to call me all the time. We would talk back and forth, and we would talk about the company and the software and everything else, and I felt like I knew a lot about the company, and then at 10, 12, I never really traded it, but at 10, 12, $18, I felt like it stood there for 10 years. Yeah, I feel like that stock was under $20 for at least 10 years, maybe longer. I don't even know if it broke out over $10 or $12 by 2010, and then in the last 6 or 7 years, it's gone to 180. It's just been an incredible run. So I really don't.
Yeah.
I mean, we're a I don't have any other opinion.
I figured I'd ask. You usually, like with a storied company like Oracle and Larry Ellison as their leader, I figured you would have a strong opinion. Speaking of being surprised about resilience, is any part of you surprised that Bitcoin is hung around this 100,000 level? I know we had a quick dip to 90,000, which was gobbled up by the market with the quickness. Is any part of you surprised at the resilience of Bitcoin here? And what does that say about the asset and the demand for the asset in your mind?
It says that the asset has a positive correlation to equity prices, no matter what anybody wants to think, and that the real test for Bitcoin will come if there's a stock market sell-off. Can Bitcoin withstand any selling pressure? Because the challenge with Bitcoin is that it is a lockdown passive asset for Bitcoin investors. So if you own Bitcoin right now, you have a lot of money tied up. If you own one coin, you have over 100 grand tied up. If you own a lot more than that, you have a lot of money tied up in Bitcoin. There's nothing you can do with it. You can't borrow against it. You can't buy equities with it. And with equities at all-time highs, there's a reason why people don't want to sell their Bitcoin, and they want to keep their Bitcoin and not worry about the equity market, because the volatility in Bitcoin is higher than the volatility in the stock market, which means the upside in Bitcoin is greater than the upside in the stock market. That's the whole reason for holding it. If the stock market was to sell off, just as an example, if the stock market was to sell off a little bit, then the challenge for Bitcoin is who starts to sell Bitcoin because they think there's a better opportunity of buying Apple at 180. Do you know what I'm saying? Like right now, you're not selling Bitcoin to buy NVIDIA. But if NVIDIA is trading for $95, are you selling Bitcoin to buy NVIDIA because the NVIDIA volatility will be higher than the Bitcoin volatility? As Bitcoin goes down, the volatility will crash in there. And as the market goes down, the volatility will expand. So all the roles reverse if stock prices go lower and Bitcoin prices follow. So I think the challenge for Bitcoin will be, if there's a market sell-off, can Bitcoin keep its wings up? And I think it'll sell off. I don't know how far. I think Bitcoin's going into the 80s, maybe 70s.
Mm. But then that seems like you don't think in some part that test was proven in 2022 when you had
I do think, but it was
Apple and the Mag 7 getting discounted 20 to 30%. It
Sure.
took a big ride down to 20K.
Yeah.
But I mean, we're back here at 103,000. So
yeah. Well, the world's a different place, and in 2025, Bitcoin has a very different appeal. Bitcoin has a global appeal that it didn't necessarily. Bitcoin has an appeal beyond a certain demographic that it didn't necessarily have in 2020. So I think that Bitcoin has become a legitimate asset now for anybody and for any type of portfolio. So I think that it has a different spot in the investment world.
All right, let's keep the show moving along. It's
Sure.
5:11 p.m. Let's welcome Pete Molmet to First Call. Pete, welcome to the show, my friend.
Gentlemen, Victor, Tom, how are you?
Hello, Pete.
Good
Pete,
to see you.
I can't tell you how much I love that background, my friend.
There you
Looking
go.
Looking fly.
Forex Focus. Tune in every morning, 6:30. We lead you to Tom, Tony, and Vanetta. Fantastic stuff. And we'll certainly have some stuff to talk about this week. But a lot going on. It seems like reality's sinking in with all things Colombia kicking it off. So the putative, how petty, so pejorative a word, but the so quick to draw a line in the sand piece is really interesting. So we'll see how reality sticks. I mean, we're still, 200 points back in NASDAQ is a lot, but we're still have a huge chunk built into that run up. So, and I think, Vic, you asked a really interesting question. Will this Bitcoin rally? Because it has been Teflon. Up to this, I mean, the best we could do is 90,000, and that was less than a day and a half. So it'll be really interesting. And maybe, Tom, you make a great point. And honestly, I didn't kind of break it down that way, but the substitution effect of markdown equities will become really interesting. So
markdown equities, Pete, marked up volatility.
Right.
It's the only thing that it's the only reason I can see why somebody, especially somebody who's really into digital assets, would want to take. Remember, most people have long-term gains in there too. So It seems to me it can be completely reasonable to take some profits and buy some equities on a big sell-off. That's all.
Be interesting to see how that plays out, because we're about $1,500 lower in Bitcoin, but again, 103. We're still well into the upper end of the range of let's just call short-term 90 to 110. So not that much damage, considering they're just about printing new lows in NASDAQ as we speak. So it'll be interesting to see how we go into Monday. Bonds are. It's really, the focus is on the long end right now. The short end of the curve really isn't moving much. The twos are wrapped right around 4.5%, and there's not a lot of interest on either side. Or 430, excuse me. The tens are about 460. It's the long end that's really got the whip to it right now. So it's interesting to see this play back and forth.
You've been on the right side of that. You've been on the right side of that, betting against the long end here, betting in favor of higher rates in the long end of the curve. Right. I'm curious, do you still have that level of conviction here? I mean, rates have come in just a little bit. I wouldn't say there's a massive rally happening in the long end of the curve. It just stopped going down. How are you thinking about the long end coming into this week?
Vic, if given we didn't have the periphery of knuckleheadness or whatever we want to call it, I would think anywhere between 113 and 114 would be. I know, Tom, you think they're cheap, but if you're going to play and lean on higher rates, four-handle balance, it's worth selling. I think those bets are off the table right now, because with equity so soft, you look at currencies, euro, sterling, Aussie, they're all giving it back like they're going to be the next victim. Peso even's getting hit it's very thin now, but getting hit very hard. The yen's the one thing that's trading higher this evening. So flight to quality, maybe the bonds have more to run on the upside. So I would not be inclined to think that 114 is a good place to reload on a short delta. I think maybe we can stretch our legs a little bit higher. If we see NASDAQ trade anywhere below 21,000, we see SPOOS give back a big chunk. I think we trade 115 relatively quickly in the bonds, and the twos don't really move or reflect that. I think this is where you want to be if you're going to trade that direction.
One more thread I just want to pull on there. It seems like you don't want to trade the counter trend. So no part of you wants to get long on a move up to 115, but if it gets to 115, you'll take the opportunity to get short. Is that true? Or do you trade both trend and counter trend moves?
Not me. I'm long bonds right now, and I will take the opportunity at 150. I'll take the opportunity at 114 and 115 to lighten up a little bit because I've been holding them a long time.
Right.
And we're already above my break even, but this is, 114 and 115 would be a nice profit area, but I will not get short there.
Right. Where would you turn yourself around? 120, 121, or would you?
Oh, not until we get up to the 120s. Right. I'm a bond bull. I think interest rates are going lower, and I think if the market sells off a little bit, you'll see lower interest rates and higher prices.
Yeah. And, Victor, you mentioned this last week too. They've taken all the rate cuts. At most we had 7 priced in a couple of months ago. Mm-hmm. We're down to 1 now, and they keep moving it further out in 2025. So almost the pendulum of that swinging has swung almost too far. And maybe if that's the case, you'd think you'd see a little bit more life in the twos. We're not seeing the bounce in the twos. So I think the range here is where I'm interested. Yeah, I'm willing to play both sides here. If we get back to 111, I think they're cheap. Around 115, 116, if equity's steady, I think sellers are going to merge. I'm willing to trade both sides on this particular one where, again, NASDAQ is, I still think it's going to be an interesting week. You've got the Fed on Wednesday. We know there's no rate cut coming, but it'll be interesting to see if he gets questioned about the Fed's independence and what that spun up nature of that conversation gets to be, and whether or not there's any takeaways from that in terms of driving rate expectations. I mean, what's he going to say? Just the tagline: "We're independent. We maintain our independence up until he doesn't have a job." So, but the one takeaway from that, it's not what he says. It's the fact that he can, at the will of one guy, be replaced relatively quickly. And that would, I think, be probably a little unsettling for everybody. So it'll be interesting to see how shaky the wheels get right now. So I think there's a fair amount to be done.
You won't be able to tell anything until the crap hits the fan. Like, you only are able to actually judge people when things are bad. When things are good, everybody just speculates about, everything else. It's just a who can build a better story. But when things get bad, that's when you kind of see what people are made out of. And I think that's what's interesting on the horizon. We're not anywhere close to that yet. I mean, down 250 in the S&Ps on a Sunday night is a little bit weird to me, because that seems like a big move in the NASDAQ futures. The S&P's down 32. Much less. Russell barely moving, Dow barely moving. So this is really, they scared the children in the NASDAQ, and the NASDAQ is the head. You know what I mean? Yeah.
So let me ask, with Meta coming out with we've got Meta, Microsoft, Apple, and Tesla, big chunks of mega cap technology. Do they get overridden by just general, or is this are these earnings that will have an oversized impact on the underlying indexes?
Well, based on what happened in Netflix, I don't think that I think the earnings will speak for themselves.
Bro, I'm going to pull my hair out if we get more 10 to 20% moves in the largest companies on the planet. I'm going to sit here. I'm going to pull all my hair out bald. If we have another complete outlier earnings season on these already massive companies, I'm throwing in the.
I think you know what, Vic, it's so weird you say that, because I kind of feel like I was thinking the same thing the other day. I'm like, this cannot be a cycle that we're going to have the biggest companies in the world be off by 10%. Like, it just can't happen. So it just can't happen. It's not priced.
Like no matter how bearish the narrative is, these things keep resetting 15% higher outside of a 7 to 9% implied move. It's just like, what the hell?
It's insane
out there.
It's insane. It's insane. I totally agree. I think Netflix might be it for like the crazy outlier moves. I don't know.
Famous last words. Somebody put that on a shirt.
Yeah. Well, I just
after Microsoft, Meta, and
there's no way if there's another 10% move out there to the upside that somehow is not priced in. That's only priced ahead. It's like, what are these guys doing? Like, how could they be off?
That's going to shatter your whole efficient market. You're going to have to come to my side, start reading charts and reports.
You're right. It's going to shatter my belief in efficient markets because it doesn't make any sense. I'm going to let Netflix slide because it's a little guy compared to the big guys. But Netflix is what, a $500 billion company or something?
Yeah, well, they start charging $33 a subscription and stop letting you share the passwords. I can kind of understand how they find a bunch of money under the mattress. Real quick, Pete, before you get out of here, 2,800 in gold. As the markets climb higher, I'm not going to ask you the chucklehead question, which is like, what's the gold market telling us? Just how do you see, how would you trade the range here? How would you trade gold or silver?
Yeah, you're absolutely spot on. Silver, they tried silver a little bit earlier, a little bit lower, right around $30 here. The spread, the gold silver ratio is back out to 90 to 92 is an interesting area. What it does again tells me is I don't mind leaning short some gold up here. I think the range will hold, and we're at the upper end of it. If we get anywhere up to 2,900 again, 28 and a half, 28 and a quarter, 28 and a half. Again, the range is kind of defined as that for me. Vol is good, not great there. The markets are pretty good. You can get done during the day, most times in the middle in gold. Silver is a little bit more of a challenge. I wouldn't mind adding some short gold delta right now, anywhere on a bounce. It really has lost its moniker as the flight to quality. You would think we'd see a $30 up move. It's completely detached from that, and I think it's acting differently because it's built in its story already. So, yeah, I want to see if we can get one last, maybe I'm being a little stingy, but another $25 or $30 on whatever reason. I don't really care the reason. If we can get the price action up there, I wouldn't mind leaning there and then looking and putting the silver piece on back if we get back down to $30. So I think both those are detached from anything else we're looking at.
This is what they call in the biz a little bit of a teaser. If I wanted your opinion on what how to think about the dollar against a basket of world currencies, where can I go to catch more of your opinion on Forex, my friend?
You can come to Forex Focus every day at 6:30 on the Tasty Network. Thanks so much, Vic. I owe you one, my friend.
Appreciate you. Pete Momet, everybody. Thanks, Pete.
Thanks. Bye, guys.
All right. Ilya Spivak, welcome to First Call, my friend. You know what?
Gentlemen.
As he comes in, I tagged Ilya on the dot, Tom, on how he worked out. Because he came on the show and I go, I bet you're not like a New Year, new me person, are you? You're not like a New Year's resolution guy. I don't see you as
no chance.
Not at all. And then I go, I can even tell you what type of workouts you do. For some reason, Ilya, I pictured him. I go, there's no bench press, no squat, no machines. You're kind of a calisthenics guy, aren't you? You're kind of like you wear a sweatsuit or maybe even a velour Adidas tracksuit I could see you in.
The velour Adidas tracksuit is there, but it's not for the workout. That's for going outside.
And I can see him just in the corner doing the
like 100%. Old school Soviet workout. That's what I see.
Maybe like in a medicine
all
ball,
burpees like all day.
He goes, you nailed it. Ilya Spivak, my friend, what say you? A little bit of weakness on the open, Ilya.
I'm not mad at it. I was kind of waiting to see what we're going to do at those highs in the S&P last week. Obviously, I've been short. I've been short since early December. I've taken some pieces off already because obviously we had a nice run down toward the beginning of the year. I'm not in the Russell anymore, but I'm short both NASDAQ and S&P. And I was looking to see what they were going to do because last week S&P in particular ran right up to the high and stopped right there. So this is good. I like this. I thought last week was interesting because everything running into last week was all about rates and the Fed and the bonds, and stocks were sort of moving to the same beat and they had the same story. And last week, stocks had a nice rip, but the dollar didn't follow. It went the other way. Bonds didn't follow. They went the other way. So I sort of looked at stocks a little suspect last week, saying, oh, well, you didn't have any Fed news, so you got all kinds of hype around this headline or that headline, Stargate this and Saudi investment that, but the macro story didn't really move with it. So I didn't get shaken out of my shorts and I was waiting. So I'm pretty happy with this early week sell-off. Let's have some more.
I'm going to ask you, and I'm going to come back to you here in just a second, Ilya, and I'll ask you what you think about the economic calendar this week and the obvious standouts. But before I do,
sure.
Tom, last Thursday you and I talked about, the Illuminati meeting over in Davos, Switzerland. I'm just curious. If you have any takeaways after all the news making that was done in Davos, Switzerland.
No, and I even watched the videos that you sent me, but no, I don't.
Oh, I did send you a video, didn't I? Oh,
yeah.
This is the video. The video I sent was.
He says coyly, "Oh yes, I did send you a video,
no,
did I not?"
I sent it to Tom.
He sends me a video of some guy badgering Larry Fink.
No, there's the two reporters from Rebel News, and they somehow were able to track Larry Fink for 9 minutes down the streets in Davos, asking the most hilarious questions, and I sent that to Tom.
They were pretty funny questions.
Oh, weren't they so funny? I was dying laughing by the end of that. All right.
But no, I don't have any. No takeaways from Davos. I don't care.
I think that's what they tell all of you guys to say. It's like,
what do you mean they tell?
Rule of Fight Club. First rule of Fight Club, you can't speak about the Fight Club. I think the first rule about the Illuminati is you have no opinion. What do you think about Davos? I have no opinion.
No, I mean, honestly, I really don't care. I don't think that there's anything that comes out of those type of conferences and stuff like that where a retail investor like me there's anything to gain. There's nothing there for me.
I agree. All right. What's the most important? How do you see the economic calendar unfolding? What's important this week? It's pretty, as I think I saw one of our friends post, it's a dense calendar this week.
Yeah.
Lots of stuff.
It's a dense calendar week, and there are some really big companies with earnings. And so, I started off at the beginning of the show, the S&Ps are down 30 on a Sunday night. I kind of, and the Nasdaq's pretty weak. I can see a lot of pressure on the market this week because I just think we're rich. We're running, I feel like we ran out of bullets on the way up a little bit towards the end of the week. But, I mean, like you mentioned the other day, anything can happen with the earnings that are coming out this week. If you get a blowout to the upside, the Nasdaq's going to be right back where it started, where it finished last week. And if you get any kind of super nasty move, the Nasdaq could easily drop 1,000 points from here. Easily. I'm way more scared of the velocity of the downside of the NASDAQ than the upside. In the Russell, I'm long it. So I'm short S&Ps, short NASDAQ, long Russell.
Mm-hmm.
I don't have any exposure in Russell on at the moment, but if I had to be long one, that would be the one. Because if you're bullish on bonds, then you have to believe that the Russell is going to have some benefit from yields coming in and giving some relief to all those regional banks and everybody else in there that's rate sensitive. So if you're going to have long equity exposure, in my mind, that's where you'd have it.
I'm long bonds, long Russell. Exactly what you just said, Iliad. Not for all the same reasons, but that's just the way I'm trading it.
Yeah, I mean, and I had Russell short from that big swing up there from the high. Once that little range up there broke down, I thought it was a double top there around 2450, and so I sold it basically all the way down and then covered under 2200. So I got lucky on the exit. And now I'm just waiting. I'm waiting what it's going to do here. There's something here around 2350 where you can see it's kind of like this inflection area where it acted as a top, then it acted as a bottom, now it's acting as a top again, going all the way back to like July, middle of July or so. You can essentially like almost put a horizontal line across the chart at like 2300, 2350, and you can see it's sort of oscillating around it. So I just want to see risk reward wise whether we get back on the other side. And if we do, that looks like a compelling long back up to the highs.
If I think you guys were on the same page last week, I'm gonna ask one last question about currencies, and then we'll wrap here. But last week you guys were on the same page about the direction of the dollar, which was
I'm liking this finally. It's finally doing the thing.
Right. You both had a bearish lean on the dollar, just kind of versus the world. So I'm curious, what does that mean about? Does it have any implications as to how you think about emerging markets and whether or not they're attractive, and how you think about U.S. stock markets versus the world? If you have a bearish setup for the U.S. dollar, I'll start with you, Ilya. Does that have any impact on how you think about emerging markets, and if so, how?
Not in a structural way. So I think the bias for capital flows, if you want to look out 6 months, 9 months, is very U.S. favorable. But if you want to look at sort of the broad thing and say what emerging markets don't want is they don't want higher U.S. rates, because that hurts growth in the areas where they care about it. And of course, it hurts their ability to pay back U.S. dollar denominated loans, of which they have a lot. And so if you get some relief in the rates story, in other words, if the bonds go up, and with that, the dollar weakens, the parallel to that is less of a noose based on dollar-based credit around emerging markets' neck. And that's hypothetically better for a tactical sort of a thing. I think the trend in the dollar is ultimately higher, but it's higher like a year from now. Near term, I'm very bearish, and I'm loaded up bearish, because I think it's the whole thing from mid-September was the Fed is going to be a lot more hawkish than people thought, and then the Fed thought. And I think that move's hit a wall. I think they can't get any more speculative on that, because they're already down to a cut and maybe a second. And if you go from one cut to zero, that's a head change for the Fed. That's a whole other Fed. And that's going to require months and months of forecasting and dancing and back and forth. That's not where we are. So it seems like the move's just exhausted. The speculative juice in it is over. So yeah, okay, maybe you get some emerging markets life for the next few weeks, a month, while the dollar digests and yields digest and everything like that, and then we'll see. Because I think the trajectory ultimately is not awesome.
I'll reframe the question a little bit for you, Tom, which is you're leaning short most of U.S. markets, with the exception of the Russell. And I know you're leaning a little bit long China. Outside of that, do you have any strong opinions on, let's say, like Mexico or Japan or Brazil or just the rest of the world in terms of an investment?
You mean equity markets?
Yes, equity market.
I don't, not really. I am very interested in. I'm actually interested in other markets. I mean, I've been exploring Mexico, but I haven't made any trades yet. I've been exploring other places, but I just don't find, them interesting. It's not compelling enough for me. Like, they're not low enough to make it interesting. They're low. Like, the UK is probably the only place where I'm long stocks right now is in the UK market. And relative to the U.S. market, the UK market is really, really, really cheap. But that's very personal to me. So that's the only place I'm really long outside of the U.S. But like I don't have any big. To answer your question specifically, I don't have an axe to grind in those places. I would say the country that I'm most intrigued with is Mexico, only because I've been studying, and I've been working with a university in Guadalajara in Mexico City, and I've been working with a education firm in Mexico City. So I've been like kind of knee deep into kind of investing culture in Mexico as of the last probably the last year and a half. So I find it really fascinating, and I think there's a lot going on there. I haven't taken the plunge to actually make any equity investments in Mexico yet, but I have been working with, I think, 3 different groups in Mexico total. So I'm really kind of I'm engaged with the culture.
Yeah, I can tell you are engaged with the culture. Every once in a while, I catch you rolling an R. I'm like, that was interesting. And I think in your I think in your free time, you've been using Duolingo, and you're going to surprise us one of these days and jump.
Well, no, it's really funny.
Lingual all of a sudden.
I talked to when I was on my last road trip. I met with all these kids in the UK, so outside of Birmingham and outside of Manchester, from all these universities, and they're really into trading. But they obviously have a lot of limitations. There's no real option market there. There's no real futures market in the UK. It's very limited. And then in Mexico, it's kind of the same thing, except it's a little easier for them to trade US because their currency is kind of pegged to ours. Mm-hmm. So it's not like, it's a little cleaner and the hours are better. But the university students there are also super excited. So it's like weird. So I'm testing the waters, but I haven't really gotten involved personally in the equity marketplace yet at all.
Fair enough. All right, I'm gonna let's give it to you to give the final word to the traders going into this week. I wonder if you could, though, in your final word, if you could speak to whether or not sometimes there are earning seasons where you say you're going to lay off heavy participation in binary events. Sometimes there are earning seasons where I think you're an active participant. Given the fact that we've kicked off this one, I wonder if you could speak to whether or not, in Meta's case, Microsoft's case, Tesla's case, whether or not you think there's risk reward to be had there for selling vol in these names into the binary event, and then obviously whatever thoughts you have going into the week, and we'll end it there.
Well, for sure, if you have the VIX futures up over 17, let's just say, if they're in that 17, 18 range, or 16, 18, 19, anywhere in there, I think you can probably play the earnings, because that's enough juice in the broad market. At least it's not low. It's like it's historically kind of somewhere wrapped around the mean. That means there's probably enough juice. They're not going to be cheap. Let's put it that way. What I have found so far of the earnings plays so far is that they haven't been that. They've been okay. We haven't lost yet, but we've also stayed very short term. I've reduced my duration from normally from 1 month out to the weeklies, because I don't want to get caught on on a big move, and I've also gone wider than I usually do. But so far so good. I don't know, Vic. I think vol's at a level where you can trade earnings. I'll leave it there.
Yeah, fair enough. All right, my man. Ilya, I'm going to let you get back to your Sunday evening workout. Let you put on a sweat there. I appreciate you as always, my friend. For Pete Molmet, I've been Victor Jones. On behalf of Mr. Thomas Sosnoff and everybody here at Tasty Live, we appreciate you tuning in. Make sure you tune in live, 1:30 a.m. for all you degenerates out there who can't sleep. You have a dopamine deficiency. Join us as soon as you wake up. And if you're somewhere across the world, I'm sure that aligns with your day. Hit the subscribe button before you get out of here. Like and comment if possible on the video. We'll see you back here tomorrow. See you, everybody. Peace.